So there's a near-perfect storm right now. Reputations and trust haven't been restored fully since the terrible times of 2008. Banks are rapidly redefining their place in communities, closing branches. Banking customers are changing their behaviours. Technologies are arriving which give more and more opportunity, and on which different generations and demographics of people are becoming more reliant. We read every week about new branch closures. It feels like the banks are rushing to get all of the bad news out together so that communities will get used to the idea. But at a time when we've had such a public failure of a digital banking system, as we saw in the UK a few weeks ago, it's really important that the mix of channels is kept open and kept appropriate. Somebody born today is going to live beyond 100. Millennials are coming in, and Generation Z are coming in now to the entry level of the bank's customers, and they have very different expectations. While older people are living longer, and while some are set in their ways, many are adopters of technology. So the real challenge in the future is being able to cater for all of their client base, whether young or old, aspirational or not, high net worth or otherwise, retail or corporate. And it's again a heady mix, a perfect storm of competing requirements that banks have to accommodate. So the challenger banks have woken up a few of our sleeping giants, perhaps. They've caused people in banks around the world to think very carefully about whether they're being complacent about their clients. Challengers have typically come in with either a single proposition or a single channel. And that's been very impactful on the industry, but also it's not a sustainable model. They're all in turn either trying to diversify or introduce new products and services. Yeah, so we see a real opportunity for challenger banks and some of the established incumbents to work more closely together, to play to each other's strengths, their own strengths, and of course to share benefit, to play nicely, to put it in short. So the industry has spoken for an awful long time about the bank of the future and what it may look like. Would it be cashless? Would it be digital? Would it be remote? Would it be closed? The truth is we still don't know what the future of branches and of banking holds, but we do know some of the possibilities that technology allow and some of the demands that customers are making of them. We're talking about NextGenBanK, and clearly that's a statement about what the next generation of banking should look like. So the next generation of bank needs to be many things. It needs to be open, it needs to be modular, and it needs to be capable of evolving further still, in ways that we still can't predict exactly. So NextGenBank in our parlance is three pillars. It's the pillar of a vision of the future, which we hold and we share with our customers, and we learn from our customers in the markets. It's the pillar of modularity. This is a pick and mix. Take those parts from our solution that best serve your needs today, mix them in the way that works for you, and leave options for the future as well. And it's open, and it is customized specifically for our customers, so that no two of our customers will adopt our technology in the same way, and their next gen banks will therefore all be different and have their own value add.